Well, let's quickly check in on markets in Namibia and see what we're seeing for the day. Looking at the overall index, we've got it sitting at 997 points, pretty much flat as it stands. And looking at that local index, which strips out blue chip South African companies or South African miners like Anglo American, sitting at 280 points. And you can see also a slight bounce to the good, but pretty much flat for the day. And looking at the Namibian dollar, 8.9 against the US dollar. You're looking at dollar strength as it stands this hour. Well, let's delve into some of the economic data out on the day. RomãÄ Mostert, head of research at IJG Securities, is standing by. RomãÄ, thanks so much for joining us. So we had vehicle sales figures coming out for the month of January. Now you're looking at a contraction there of 9.7% year on year. So 936 vehicles sold in the month of January. That's 100 less than this time last year, January. Is that a worrying signal from these in terms of where the Namibian consumer is right now?
Samantha, yes, I think we are coming sort of from off a high base. We saw Namibian new vehicle sales being very strong for the most of last year, and then it sort of lost momentum towards the end of this year, and it also came out weaker, as you said, in January, below the 1,000 level for the first time in a couple of months. So what we take of this, I think we've done a correlation between Namibian new vehicle sales and real GDP, and that correlation shows to be 92%. So it's in some way gives us confirmation of our forecast that economic growth will slow down in 2013. And I think it's maybe just sort of high base overhang effect coming through, not necessarily a concerning factor.
So what does this mean? I mean, how should authorities interpret this figure right now and this loss of momentum when it comes to the consumer side of the economy?
Yes, it's difficult to say that there's a concrete loss in momentum when, in the consumption side. If you look at private sector credit extension, which is also a demand indicator, it's still up significantly. If you look at the individual specifically, it's still up 14% year on year. So I wouldn't just say that it's a broad overall loss in consumer sentiment.
And of course, if you're talking about indicators that are tied to GDP growth, the banking sector certainly is one. And F&B Namibia appears to continue to surge ahead with their numbers. Their HEPS were up by 12% year on year for the latest reporting period for the 6 months ended December. Interest income up 11%. They seem very bullish, the company, on the prospects within the economy, the prospects to get more of the unbanked population on their books. How do you tie this into their growth prospects into what we're seeing from the broader economic picture right now?
Yes, I think if you look at the F&B numbers, it's really spectacular, and it reflects the blue chip qualities of the company. First of all, as you've mentioned, in net interest income growing 11.2% year on year. And I think that's also reflective of strong growth in advances coming through. And if you compare their growth in advances to the country's credit extension figures, then I think they had a 37% market share, which is also quite spectacular in the four-bank industry. And then also standing out in that figure is still impairments contributing positively to the performance. I think it was a reversal of 1 million rand, and your non-interest revenue also growing handsomely at more than 20%. So I think if you look at the top line growth that's coming through at F&B, it's really, really amazing, and it just shows the quality of the management and the focus on reaching the Namibian market.
I mean, you just look at that, the advances growth of 11.2% relative to overall private sector credit extension during that 6-month period, up 8.9%. So really far outpacing what we're seeing from the rest of the sector. But when it comes to the banking sector right now, what are your thoughts in terms of private sector credit extension? How much money banks are going to be pushing into the economy to help fuel growth?
Yes, I think that's quite an interesting question, because when you look at PSCE growth, it's very, very strong. As you've mentioned, I think it's up more than 16% year on year, and businesses also quite up strongly. But the interesting fact is when you look at the sort of capital adequacy ratios of F&B and the risk in their book, it seems to be not very significant. Tier 1 capital adequacy of F&B sitting at 11%. and the tier 2 also improved somewhat. So and then you compare non-performing loans and you look at the impairments that's actually reversed on income statement. It reflects relatively low risk on the income statement. So I think there's still a degree to which these banks can increase lending without going on too much risk. However, I think that the Bank of Namibia might be a bit concerning on the growth in credit, and they might be looking at maybe controlling it in some way, even if it's without the interest rate increase, maybe in some different way.
Now let's just throw forward to Thursday, because we got the national budget for the 2013-2014 year being tabled, same as South Africa. And now last year, a $40.2 billion budget was tabled, and of course that gave a deficit there of around 4.8%. So what are the expectations in terms of the size of the budget, the focus of the budget this time around?
Okay, so as we've mentioned up until now, domestic demand is fairly strong, although we've seen a bit of a loss in momentum towards the end of this last year, the beginning of this year. And then in light of that, we also have a very loose monetary policy currently, and I don't think the Bank of Namibia has much of a choice when it comes to the monetary policy, as we must follow South Africa. So I think the government will in some way be forced to continue on the relatively flat expenditure profile that was announced last year. Although if you look at those figures, we only expect, they only forecast expenditure to grow by a mere 2%, which I think is maybe a bit conservative. I think it will come in ahead of those figures. And then what will be interesting is to see their take on SALCO revenues and what kind of growth we can expect in the upcoming year from SALCO revenues. Will it contract by 20% as it forecasted? Will it be less? Will it remain unchanged? And I think that is a key leverage point for the Namibian government, and it can give them some degree or some leeway in terms of the expansionary in the budget, maybe executing some more expenses or be a bit more lucrative on the taxing side.